But Pennsylvania, the surprise upset last night, and that really heralding a stronger than expected showing from Democrats after John Fetterman flipped a Republican-controlled Senate seat. Here's Fetterman earlier today on the ground.
And we had our slogan. It's on every one of those signs right now. Every county, every vote. Every county, every vote. And that's exactly what happened. We jammed them up.
Joining us now, we've got Isaac Boltansky, BTIG Director of Policy Research, with more takeaways from the midterm elections. Just round out, Isaac, for us, your main takeaway from what we've already seen thus far, and then the races that are still yet to come.
Look, as of this hour, it still looks like the House is going to be under Republican control next year, albeit with a far slimmer margin than any of us expected. And so my main takeaway is still that we will have divided government next year. And I am of the view, which Richard spoke about before, that while history doesn't repeat itself, it very often rhymes. And so I continue to focus on what it might look like next year. And I am harking back to the 2011 time period when we had a Republican House and a Democrat in the White House. What did we see then? We saw fiscal fights, we saw debt ceiling brinkmanship, and we saw what accounts for fiscal austerity here in D.C. with what was known as the Budget Control Act, which had some sequestration requirements in it. And so that's still my baseline for next year, even though we are waiting to see who will actually control the Senate.
Isaac, is it a bad thing for markets? Now, markets rallied into this under the assumption that we would get that red wave. Doesn't look like that's going to happen. But is it bad for markets that we may now have really an unchecked President Biden so he can continue to push through his policies?
So this is my argument. We are going to have a Republican House, right? And as long as there is no trifecta here in D.C., I think that markets, by and large, will find a way to be happy because you'll have clarity on the legislative side and you'll have some degree of a check on the administrative side. I still think there's going to be a fair amount of administrative action next year. Look to some of these regulators in the alphabet soup of D.C., the CFPB, the SEC, the EPA. You're going to see more and more action from them, given the logjam that we're going to have in Congress. But my sense is still that we will see a divided government, and that provides a modicum of clarity for markets that are already grappling with geopolitical risk and inflation and everything else.
As Kevin was saying a moment ago, the first big challenge is going to be the debt ceiling particularly. And with that in mind, we are already in a situation where we are potentially kind of barreling towards, or at least bracing for at the household level, what a recession might look like and how that might impact individuals and families and businesses as well. And so with all of that in mind, how do the midterm elections also and the results therein also really shape the course of the economic recovery that is sputtering right now?
Yeah, look, I think we've talked about the Fed a fair amount when we've been together and the disappearance of the monetary or Fed put. I do think that with this election, we're having the disappearance of the fiscal put to some degree, and that I do not think that we should expect legislators to act aggressively if we have a downturn on the fiscal side. And furthermore, there are some potholes, like I mentioned, from the debt ceiling to potential government shutdowns over disagreements to even possibly some sort of Rube Goldberg-like compromise that's intended to address either one of them that involves some degree of spending cuts. Look, I think that we will get past the debt ceiling. I hope Richard is right in that we're able to do it in the lame duck. Either way, I do think we'll get past that one. But we will not have a condition where you can expect fiscal support from the federal government in an economic downturn.
Isaac, I'm on the Yahoo Finance platform right now. Pre-market moves, I'm looking at some cannabis names, Tilray, Canopy Growth, not seeing much movement there. If anything, Canopy down about 3.5%. Was it not a good night for cannabis?
Yeah, I would say it was mixed to slightly positive. You had two states decide to make recreational cannabis legal last night, Maryland and Missouri. Those are solid wins. But you had losses for similar ballot initiatives in 3 other states. My point to the clients this morning is on the cannabis side that there were 2 things last night that make it likely for Pennsylvania, a very large state, to embrace recreational cannabis in the near term. And that's choosing a pro-cannabis legalization governor in Shapiro, and Maryland, their neighbor, legalizing it, putting pressure on them. Furthermore, I think it's going to be a busy lame duck on the cannabis side. A lot to watch there to see if we finally get cannabis banking legislation. So I would say it was mixed to slightly positive overall for the cannabis space.
What about on sports betting? I mean, keeping an eye on some of the names like DraftKings even today with regard to California and where sports betting was on the ballot, where some of those measures in California at least fell short.
I think that sports betting, at least when we think about it, should be informed by what we've seen with cannabis. States are the laboratories of democracy. States are where we are seeing movement slowly but surely, even with a few foot faults, admittedly. And so I think that it's a matter of when, not if, on sports betting for most large states. But I think that there are probably going to be some lessons learned about everything from the wording of those ballot initiatives to how they're portrayed in the public. And that's the nice thing about California. You're always going to have another shot with the upcoming elections.
BTIG Director of Policy Research, Isaac Boltansky, always good to see you. We'll talk to you soon.